Welcome back. This is Seewing Yee, and today I'm going to go over what I call is the future of real estate investing using the hybrid investment model for real estate investors. Without further ado, let me share with you my PowerPoint and let's get started. And of course, if you have any questions at all after you view this video, please comment below and I'll be more than happy to answer your questions. This is the first of a series of this concept I'm going to present to investors out there. So bear with me. I may be missing some areas, some minute detail. If that's the case, please comment below and I'll be more than happy to answer your questions to reply to you. This is a very exciting business methodology and it's the wave of the future in my mind. Without further ado, let's get started. Everything I'm going to talk with you about is very high level. It's a big picture situation. I'm not going to break down any details. If I were to do a deep dive, it'll take several hours to explain this presentation. So just keep that in mind that I will produce more in-depth, detailed videos about this hybrid business model in the foreseeable future as we evolve in this unique new asset class. So without further ado, let's get started. This is a hybrid investment model. The key is, before I go to the PowerPoint, the key is you will continue to invest for the long term, meaning not only that, this is a traditional, very historical business model. The tenant you're going to get are long-term tenants. So you'll go again. I have to really truly emphasize that this process, this new concept is that you will continue like you always have been over the years to buy and hold a rental property, achieve cash flow, and the tenant will be a traditional tenant, long-term, 1 year annual renewable lease tenant situation. However, that's primary goal. Your secondary goal is after a while, upon doing further research, you may convert into a midterm rental. Midterm rental or you getting tenants or anywhere from longer than 30 days stay and less than 360-day stay. Again, this midterm rental methodology, you can access my YouTube channel or enter my website to become a free member of our real estate investment club. You will learn more about it, but I'm not going to dive into too much detail about the midterm rental. All I can tell you is the midterm rental asset class is evolving, is up and coming, is a brand new asset class. It's very exciting. There's a lot of great buzz about it. So just keep the open mind. I'm going to share with you everything very high level. So to get you excited at least. All right. So anyway, so the methodology once again is the ideal situation. I'm going through this scenario where you can buy a new investment property. However, many of you already have existing rental properties in many locations throughout the US. You can also use your current long-term rental situations and potentially convert it into a mid-term rental situation. So it makes sense as well. But anyway, so the ideal situation, again, the other situation is you're going to buy a single family home, duplex, triplex, and fourplex. And the price range is around $250K to $1 million in prices based on this particular example. But you could you can use this methodology anywhere in the country for that matter, as long as the numbers make sense. You can buy invest property in the Midwest or in the Western region. But I am focusing this video specifically to buy a new construction properties in the South and Southeast, mainly Florida and Texas, and with other areas as well in the South and Southeast. So anyway, so I'm restricting these videos for new construction only, fastest growing housing markets in the South and Southeast. And because when you obtain 1 to 4 units, you qualified under the residential investing and you can get some favorable Fannie Mae lending guidelines for investors at the lowest favorable rates possible based on a historical situation. All right. So let's continue the next slide. So again, this is an example. This is just a generic example. Ignore the specific location. It'll come to you on a deep dive in the future. This is a typical new construction home around 269,000. Just example. Again, you put 25% down payment, which is your down payment right here. And I'm going to assume you're going to get a mortgage interest rate for investors at 4.99%. Yes, you heard me right. Even on this high interest rate environment, whereby the current rate, the date of this video is, what's today's date? Today's the 6th of June, 2023. The mortgage rate is around 7% or a little bit less than that. But for investors, if you do a traditional investment loan, you're getting at least 7.5% because investors are charged higher rate. However, because we have great relationship with builders in the various locations, we're new construction builders, because of the power of our network, we're able to negotiate for around 4.99% 30-year fixed rate mortgage, which is mind-boggling to say the least. So I'm using this assumption to go through my numbers. Again, this is amazing to get something, to get financing for investor at around 4.995% or give or take, instead of the typical 7.5 to 8% mortgage rate for the investors. So this is another game changer situation. So yeah, this mortgage product is available because of the power of our real estate investment club, the Yee Real Estate Network. But a further point, I don't want to promote myself too much, but this is a mind-boggling game changer in terms of mortgage rates. So I'll give you a very good negative positive cash flow, much higher than what you've been hearing out there. So if you're experienced real estate investor, wherever you locate in the country, whether you're a newbie, this presentation is really very unique. So you need to digest what I want about these educational modules. Anyway, so based on the $2,300 monthly gross rent, I'll get this scenario, by the way, this what we call a pro forma is a long-term rental situation, and you can pay a property management manager to manage your property. So you can pay an 8% property management fee, 8% against your gross rent on a monthly basis. At the end of the day, you do a 25% down payment based on 4.99% mortgage rate, and the estimated gross rent monthly around 2,300, and you minus the vacancy factor, maintenance, and property management fee, and the monthly taxes, insurance, whatever, and the monthly debt service. At the end of the day, you have a very good monthly net cash flow of approximately $571. You can't get any better than that based on today's current interest rate environment. This is amazing numbers. And furthermore, again, this is a long-term situation. You're renting to a long-term tenant. You're signing typically a 12 months annual renewable lease, a typical long-term buy and hold strategy. But this is a before situation. Okay. So again, I'm not going to discuss the numerical formulas, which is very desirable, almost 1% rent to value ratio. Capitalization rate is 7.4%, cash and cash return is 9%, and total ROI around 32% based on 5% depreciation projection. So very good first year projection. Keep that in mind. Okay, this is before. I call it before and after. Now you have the numbers really is amazing. Right? Who would have thought? I know cash flow have been very constricted. I don't know that were based on the skyrocketing of home prices in the past 2 years. And rent is barely catching up. The cash flow has been very challenging for those investors in the last couple of years. But again, the ability of us negotiating with certain builders in the selected markets in the South and Southeast, this real mortgage rate of around 5% will give you this amazing monthly net cash flow as a starting point, which is pretty amazing. Okay, so again, this is a traditional methodology, and then this is a before. I'm going to show you after, meaning if you were to potentially convert this property after you possess whatever to on a midterm rental scenario, that's very ideal. Now, let me give you a minor heads up. Who are the midterm rental tenants? Some of you are thinking, could be traveling nurses and healthcare professionals. No, there are many potentially tenants that are willing to rent more than 30 days and less than 365 days. And you can self-manage, by the way. I mean, there are many resources available for you to self-manage a midterm rental property portfolio, regardless of where you live. You could self-manage your midterm rental properties portfolio remotely and passive far away, if that's a situation. So there are, with the technological advances in the real estate industry and with all the additional resources available out there, you actually can do it. I'm not going to go over the details, but it has been done. You can hear more about it. It's very much doable. Okay. Just keep that in mind. Okay. Have an open mind on this particular presentation. So if you conduct further research and due diligence after buying this property, if you want to convert it, you have the options and the flexibility to convert this long-term annual lease investment methodology into midterm rental. And again, you can rent it to so many different kind of people. You can rent to digital nomads. You can rent to anybody out there. That there's so many different types of potential renters out there. I'm not going to go over everything with you right now. And like I said, I have already videos that we discuss about that, the different kind of midterm rental tenant. There's so many out there that are willing to pay you a higher rent so we can do it a fully furnished. By the way, the website we should really do some additional research is furnishfinder.com. You can also use Airbnb to help you to incorporate into this midterm rental as well. So tool set organization, tool resources are furnishfinder.com and Airbnb. And these two organizations are more than happy to help you leverage into a midterm rental property strategy. All right. So just keep that in mind. Of course, you need a fully furnished property based on the per square footage of your property. Is this situation, this example, a 1,400 square foot price home, you will most likely spend around $15,000 extra to furnish your property. The internet connection, the sofas, the chairs, the table, kitchen items, the whole beds, everything, to the tune of additional 15 grand. So yes, it's extra cost to potentially convert your long-term rental into a midterm rental. And this is the approximate cost, give or take. The ROI you calculate. It'll take you a few years to recoup your money based on increased rent. And in terms of rent, earlier scenario on the long-term rental situation, you're getting like $2,300 per month. But just for the sake of assumptions for this video presentation, upon further research, your midterm rental tenant will potentially pay you 50% rent higher than a long-term annual lease tenant. So 50% multiplied by 2,300. Now your new gross rent is monthly is $3,450. Okay. And of course, I increased the vacancy rate. The assumption will be 10%. Okay. For the year. And of course, the maintenance fee also or projected into the scenario is like another 6 to 7% for maintenance, cleaning up and all these kind of things. And also you can self-manage. So you don't have to pay a property manager 8 to 10% of your rent. At the end of the day, the best case scenario to upgrading to a midterm rental situation, of course, your down payment is higher, above beyond a 25% down payment. And of course, extra furnish costs and what have you. And then because of the increase of rent, $3,450. So you minus monthly basis, your net cash flow, instead of $571, your net cash flow per month, net cash flow profit per month is approximately $1,430. And look at the revised numerical metrics, the revised returns, if you will. The rate to value ratio was 1.3%. Capitalization rate is 11.2%. Cash on cash return is 20%. And total ROI is 38%. We're talking the first year projection I know I may be talking above some people's heads, especially newbies who are listening to this video who may not understand what I'm trying to educate you on these numerical formulas. Don't worry about it. For right now, just digest this high level presentation. All right. So at the end of the day, this is the best case scenario for midterm rental property in this situation. All right. So does that make sense? So bear with me. All right. This is the before and after on the single family home. Now, again, the numbers 1 to 4 unit is ideal to do this kind of situation. So I'm going to use a final example of a fourplex. Okay. A fourplex, which is a $1 million fourplex, approximately 5,000 square foot. Fourplex is 4 unit, 4 separate units. And this example, this pro forma is a long-term rent. All 4 units are annual lease, year over year, right? Traditional investment methodology. If you want to, this is the before and after. Okay, I'm going to share with you the after scenario as well, just like I did on the previous example. But the before, this is a typical traditional long-term lease situation. All right. So therefore, buy this brand new property, fourplex for $1 million. You put 25% down payment. Again, the mortgage rate is similar, 4.99%. By the way, this mortgage rate reduction scenario, you're not going to find this scenario anywhere out there. By being a member potentially of our real estate organization, by the way, it's just you will be a free member of our organization because we have negotiated some great deals with select builders in different parts of the country, which will provide us with a drastically reduced mortgage rate of 4.99 or 5% thereafter. So again, you don't have to buy down the points, nothing like that. It's just a flat out, much improved mortgage rate. There's no conditions from you to the builder. That is the beauty. That's the value add, which is absolutely amazing. So anyway. All right. So let's go to finish out the traditional model. I'll say this gross rent on this fourplex is slightly 400. So per unit, per door, if you will, is I think around 1850. So per door, you minus the vacancy losses, you minus the monthly taxes, insurance. And this traditional investment model, yes, you're going to hire a property manager at 8% of your rent. At the end of the day, you put 25% down payment, which is $250K, plus clause, whatever, your total out of pocket is $259. So therefore, at the end of the day, the monthly net cash flow is $955, almost $1,000. So per door, the monthly naked cash flow, monthly positive cash flow per door is around $250. So very ideal numerical of metrics given today's real estate environment. So rent to value ratio is 0.7%, capitalization rate 6%, cash on cash return 4%, and total ROI at the end of the first year only is 28%. So digest this. Okay, once you review this video, you might want to pause this screenshot and just digest the number yourself. Again, if you are newbie, you might have a hard time to understand this kind of formulas. Now, there's nothing I can do about it. This is a high level presentation. If you are experienced investor, you probably understand fully what I'm trying to project. Right? So this is this is a before scenario. Now, you could, like I said, you're not obligated to convert your long-term rental situation into a midterm investment model. It's up to you. You have the options. You have the flexibility to convert it to midterm rental at any point in time of this particular property. All right. Just want to make this clear. But I'm giving you the best case scenario. If you were to convert this into a midterm rental, let me share with you on this fact. Okay, right here. This scenario on this fourplex applies to a rental situation. Again, let me give you some similar assumptions because the rental is the vacancy factor is probably higher. I mean, on an annual basis, on an annual 12 months basis, you might be able to get 3 or 4 tenants. If each tenant will rent your place 2 to 4 months, just do the math, right? Each 12 months time frame on a midterm rental situation, you're probably going to have 3 or 4, maybe 5, 10 tenants totally. Right. So it's not that bad. Okay. It's even when you self-manage it, really it's very much doable. There are systems and process and procedures out there where there's not that much work. Okay. It's not like this is a short-term rental situation where you have to deal with so many people on a monthly basis. No, this is not a short-term rental situation. It's a mid-term rental situation, which is much more efficient in terms of your time spent to manage your mid-term rental properties. It's not as bad as you may think. So keep an open mind for right now. So again, other than your down payment, which is quite substantial, I'm not saying, don't get me wrong, in a minute you cannot or does not have $300,000 down payment to buy a $1 million fourplex, but some of you do. So again, this is just a sample scenario. I can go to a Midwest and show you a fourplex for $200,000, but the concept and in philosophy is the same. Okay, I'm giving you an optimum $1 million fourplex and an optimum $269,000 single family home on the previous example on the ideal market, which is in South and Southeast, which is the best location. But you can use the long-term rental to mid-term rental flexibility scenario in any markets, really think about it. But you have to run the numbers. I'm not going to get into the details of it, but you can make this concept I'm teaching you work in anywhere in the country. But I'm just using the best case scenario, the best location, which is typically in Florida, in Texas, because this is something like my background for my investors over the years. And we are familiar with this kind of market, remote, new construction, best locations, what have you. And all right, so let's finish up. Okay. And then, of course, if you were to convert it into metro rental, you are, again, if each unit is 1,300 square foot, the cost to furnish each unit is $1 per square foot. So basically, the actual cost associated with furnishing all 4 of the units is approximately $50,000. Okay, additional $50,000 above and beyond your down payment. But so again, you have to calculate how many months to recoup the money back from the money come out of pocket to furnish each unit. Does it make sense? All right, because you're charging higher rates for traveling nurses or healthcare professionals, digital nomads, and a whole host of other potential midterm rental tenants. Yeah, so I'm using the assumption once again that you have the capacity to increase the rent 50% above and beyond the long-term monthly rent. In this case, 50% more is to give you a new gross rent on all 4 units of around $11,100. Okay. Now, of course, I increase the vacancy rate for 10% because that's the assumption. Your maintenance percentage is 5%. So I've done my best to give you the best assumptions possible. So therefore, at the end of the day, based on this much higher rent, and not because you're going to do self-managing. Yes, you can do it. Self-manage this midterm rental property. Regardless, you can live next door to your unit, or you can live 3,000 miles away. Yes, you can self-manage your midterm rental portfolio. So just keep this open mind. It's very much doable. I cannot give you details at this moment. Down the road, I'll do more videos about it. So your new monthly rent for all 4 units, or about 11,000, which is quite attractive. So then, of course, you minus your monthly mortgage and your monthly debt service, which is right here. At the end of the day, your new monthly net cash flow is $3,718, almost $4,000 monthly net rent based on the medium term, midterm, medium term, whatever terminology. There's no right term. But anyway, again, the new revised worker formulas is rent-to-value ratio is 1.1%. The capitalization rate is 9.3%. The cash on cash return is 14%. And a total ROI at the first year is 34%. So this is a very attractive, very ideal scenario for rental situation. So I think I have put everything. So it's just a simple, high-level explanation of how you could piggyback between long-term rental investment methodology and the up and coming midterm rental situation that's going to blow up the real estate industry for years to come. This up and coming scenario. So I'm just going to give you some heads up. The potential as a real estate investor, you have the flexibility to explore whatever option that you feel the fit your situation, your goals and objectives. So hopefully these situations has helped you. Thank you so much. And if you see value from this presentation, please smash the like button and also subscribe to my YouTube channel and also comment below to let me know what you think about this new investment hybrid model investment methodology. And if you want to learn more about this midterm rental situation, please quickly visit my website below and drop email into the form to subscribe to our weekly turnkey real estate investor newsletter. Once you join our free network, you will receive weekly market updates, investment opportunities, real estate education, interview with top industry leader straight to your inbox that you just won't find anywhere else. What we do here at our network is helping investors invest out of state. This is our specialty. We connect you with experienced network real estate agents and experts in the hottest markets throughout the country, regardless of where you live. Helping you invest in profitable cash flow properties is what we do best. Thank you so much for attending. This is Seewing Yee. Have a nice day, and I will see you on the next video very shortly. Thank you very much. Bye-bye.